To comply with all the regulations, an investment fund domiciled in the EU must have a management company. They can either do this themselves or appoint a third-party management company, and Luxembourg has plenty of these, working with fund managers looking to distribute their products across Europe and beyond. I've come to speak to the team at MDO about the role of these mancos and the appeal of Luxembourg as a fund centre. What makes Luxembourg such an attractive fund domicile?
I think it's important to point out it's not any tax advantage, it's not any other speciality that would differ Luxembourg regulatory-wise from other EU countries. Luxembourg was the first country when UCITS Directive 1 came into place that actually realized the potential. Luxembourg created the legal framework, a very open liberal law. They created the necessary infrastructure around it, IT, audit, lawyers, and over the years, the ecosystem, as we call it, within the fund industry has grown over the years and has made Luxembourg today as attractive. There are other factors. It's very stable, it has a very high Moody rating, it attracts quite a lot of good qualified professional staff, it is a very business-friendly environment. All of that together has created this important and very successful fund hub within the European community.
Now I'm hearing a lot about management companies. Can you briefly explain the roles and duties of those?
The management company has basically three functions. On the one side, you could call it's the police officer. It has to ensure, always in the benefit of the investor, that all the delegated parties, depository, fund administrator, portfolio manager, are compliant with the local laws and regulations, that they do their activities in the best interest of the investors. At the same time, it is also the CEO of the management company. It must make sure that the prices are right, that they engage the right people, that they do a due diligence over all the parties that are involved in this fund structure scheme in total. And the third is also, they are also helping what we would call the fund initiator, which typically is the portfolio manager or the bank, and they help them to actually find their way through the legal, operational jungle in Luxembourg and elsewhere.
Now I understand that some funds do this in-house, whereas others come to a third-party provider, such as yourselves.
Indeed, there are these two models. I mean, I would say, as a principle, general scheme, you can say, the bigger the portfolio manager or the asset manager is, the more AUMs they have in Luxembourg, the bigger is the likelihood that they have their own in-house management company doing that function within their own means and possibilities. If you are not one of the huge players in the market, if you start from scratch, or maybe if you only have 1, 2, 3, 4 billion, you have the possibility to actually decide to outsource that to a specialized provider. That gives you the advantage of having specialists, professionals giving you a fantastic service, at the same time for a price that is probably economical and feasible to pay.
How big does a manco have to be in order to provide all of these services?
You could argue the minimal requirement of a management company in Luxembourg is probably around 4 or 5 full-time employees. They need risk systems, they need, of course, IT facilities, they need a lot of things to actually fulfill their day-to-day duties. But if you want to have a good service, and the duties of a manco, they go from, again, due diligences, oversight over all the parties, investment restriction controlling, risk management, reporting, many other things. You should actually have somebody who has, 20, 30, 40 people. Otherwise, you run the risk of missing out on specialists in certain areas, and you run the risk of having regulatory compliance or other problems ultimately.
And how can firms such as yourselves ensure that investors' best interests are being looked after?
We cannot ensure that the fund is performing well, but we can make sure or ensure that all the players involved in a fund complex are actually behaving rightly according to the laws and the regulations.
Are you able to recruit sufficient numbers of staff with sufficient qualifications to do all those jobs locally?
We do. We are able to attract some very good people, talented people. Clearly, recruitment will go cross-border, so we are not the only ones as well. We tend to recruit also from neighbouring countries, but we are well able to find talented people that can fulfill the different roles that are required in a management company, whether it's a compliance role, whether it's risk management, whether it's legal or any other role that a management company performs.
Now, have you been seeing an increase in alternatives funds, such as in private equity and real estate in recent years?
Absolutely. The alternative investment funds have gained tremendously over the last years since the implementation of AIFMD. We have seen, in comparison to the UCITS world, a significant increase in alternative investment funds. That can be legally driven. There is many different options available in Luxembourg in terms of fund vehicles that you're able and capable to launch. It may be also driven by investor appetite, and some of the bigger firms that have come from the more traditional asset class who are trying also to expand their expertise in different areas. So yes, we have seen a tremendous increase in private equity funds, real estate funds, debt funds, infrastructure funds, all sorts of alternative investment fund types.